Welcome to the Commercial Real Estate Show, your source for market intelligence, forecasts, and strategies. Hello, I'm Michael Bull. Thanks for being with us. Well, we have a fun show today for you. We're going to talk about design and construction. And look, there's been a lot of new development, new construction going on, and some people are concerned maybe we're overbuilding in some markets, and some people are seeing, especially if you're a user-occupier space, maybe we're not building enough. So we're going to talk to some experts in the field and see what's going on in design and construction today. Please welcome my first guest. It's Kermit Baker. He's chief economist with AIA, American Institute of Architects. He's joining us on the phone from Cambridge, Massachusetts today. Thanks for joining us, Kermit.
Michael, pleasure to be here with you.
Well, we appreciate it, and you're enjoying the snow up there, and we're enjoying the sun and pollen down here, so thanks for being with us.
Pick your poison.
That's right, that's right. Well, you know, one of the things that seems interesting about architecture is you guys track the billings there, right? And it seems like, you know, the amount of billings that architects are doing could let us know maybe what's going to happen moving down the road with the economy and construction and new supply. So what are your trends on billings for your members these days?
Sure, Michael. And let me just explain to our listeners here a little bit about what this Billings Index is, I think, to put in perspective. So we survey architecture firms every month, and we ask them about revenue that they're generating at their firm, or billings, and that is a really solid measure of design activity that's happening in our economy. And we've been doing this for over 20 years now, and we've compared it to eventual construction activity, and we found out two things, really. One, no surprise, design activity leads construction activity. Might have expected that. But what we were really looking at is to get a sense of the timing of it. And in the 20 years we've been running this, the pattern is really very similar, that design activity leads construction activity by 9 to 12 months. So if you know what's going on at architecture firms now, you're going to have a very good sense as to what's going on in the broader construction industry in almost a year in advance. The trends are January and February numbers that we've gotten for 2016 have been fairly weak. We index our billings information around 50, so any score above 50 means it's growing. Any score below 50 indicates it's declining. The number for January was 49.6, just a little bit off from the prior month. It bounced back very modestly in February to an index score of 50.3. So, very modest growth. And really over the last 6-7 months, Michael, we've seen our billings index start to slow down a little bit in terms of its growth. Still generally positive. Months are much more routinely positive than negative. But we're starting to see numbers closer to 50 rather than the mid or upper 50s. And that suggests that design activity in the non-residential sector does seem to be slowing down a little bit. So I think we're going to see that reflected in the construction sector as we move through 2016 and into 2017.
I see. So what were some of those numbers in 2015? How much slower is it?
Well, the first half of the year, we were seeing numbers routinely in the 52, 53, 54 range. And those are healthy numbers. The strongest numbers we've seen since we've been conducting this survey is around 60 or so, Michael, to kind of put that in perspective. So 60 would really be roaring. So 52, 53, 54 would be good, healthy growth, probably akin to kind of 8-10% growth in construction spending. Once we get in the lower 50s, you're talking about low single-digit growth in construction activity, and that's probably the phase that we're going to be moving into, in many sectors as we get later into 2016 and into 2017.
Well, it does seem that the construction lending has gotten a little tougher out there, and so based on your numbers and what you're seeing with your members, you think that may be slowing down construction moving ahead in 16 and 17 then?
Yeah, I think that certainly that's what architecture firms are telling that. I think that's what other market indicators are telling us too. Commercial property values have been extremely high, and I think that there is the sense that they can't continue to accelerate at the pace they have been, and with the Federal Reserve beginning to tighten short-term rates again, that's probably going to pull down some of these property values, and I think begin to reduce some of the investment incentives in those sorts of construction activities.
Okay. We're talking with Kermit Baker, and he's chief economist with AIA, American Institute of Architects. And Kermit, so you mentioned that some of the sectors are slowing down. What do you see there for the various sectors? I know the apartment market certainly has been a lot of construction. I assume is that starting to slow down a little?
Yeah, I think construction would be the head of the list, Michael. That's been an extremely strong market for really the last 3 or 4 years. We've seen very, very strong growth, and it looks like there's a growing number of markets that just really can't absorb too much more additional space. Hotel market has been very hot. That's beginning to slow down too. Office market. Has been not quite as strong. Probably has a little more growth in it, but not as much as we've seen in recent years. And retail has been sort of the laggard to date, and that still may have a bit more momentum behind it. We'll see, but that looks to be the one that's not quite as overbuilt in some of the key markets as some of the other commercial sectors.
Okay. And your architect members, they're always looking at construction costs. They're having to deal with that every day. So what do you guys see there? Are construction costs still elevating?
It's a real mixed bag and kind of confusing. So we have a very different story, Michael, between the labor side of the picture and the material side. There's a huge concern over construction labor shortages. I would say that's probably the number one concern in the construction industry these days, that a lot of the folks that worked in construction during the heyday 8 or 10 years ago have either retired or left the industry, and so it's very difficult to get new construction workers. And as a result of that, we've started to see some increase in construction labor costs, and I think we're going to see more going forward, coupled with the fact that until we solve that problem, we're going to see some capacity limits in terms of how much construction actually can occur. The material side is much more complicated and not nearly as consistent. So we're seeing prices of some products begin to edge up again. We're seeing that in cement and concrete, glass, even some of the metals that have been declining in price look like they've begun to flip around over the last couple months and maybe heading back up again. Obviously, anything related to oil prices, so plastics, asphalt, well down from where it was a couple of years ago, obviously, with the drop in oil prices. So, on net, we're not seeing an awful lot of inflation in construction costs, but I think a lot of nervousness that those could begin to inflate again. The market, certain sectors have been strong, and so we may have spot material problems, and we clearly have an impending serious problem on the labor front too, and getting enough construction labor to meet demand.
Well, and that seems to be a really big deal. No matter what type of part of the economy you're in or type of real estate you're dealing with, we all have some construction to deal with. So, is anyone trying to solve the problem of the labor? What is the construction industry doing to rectify that situation?
Well, that's a great question, and I think it's finally gotten their attention, but it has been we were a little late getting off the dime here. So there's really three things I think we need to do long term. I mean, short term, what we're seeing some companies doing is do a little more on the job training in terms of skills training. We're seeing some spot compensation increases, but longer term, I think it needs to fall in three areas, and not a quick fix. I think all of these are going to take a while to implement. Number one is immigration. The construction industry, probably more than any industry in our economy, has relied very heavily on immigrant labor. And those numbers are down. Those numbers are down for several reasons. There looks to be a bit of a hostile immigration environment. I think that's not helping anything, but I think just in general, we're not seeing as much labor come in, for example, from Mexico, which has traditionally been a very huge source of construction labor. Number two is training and apprenticeship. The programs that we had set up, freestanding apprenticeship programs run in Voc Tech schools or local community colleges, largely were, or a disproportionate number, were shut down during the construction downturn. And we need to regenerate those programs, but they do take time. And some of them are getting back up and running again, but they're not there yet. And until we get there, we're going to have a problem attracting enough. And the third is really reflecting the demographics of our workforce. A great example, I think, is that women are about 50% of the U.S. workforce. They're about 2.5% of the construction workforce. So we need to figure out a way to attract more women into the construction industry. For a lot of women, I think it's just viewed as not or kind of a less than hospitable industry to go into. We really need to change that perception very quickly if we're going to attract the labor force we need moving forward.
Well, that's a good idea, and then we can get my wife out of the house, get her doing some construction work. Need to get out there laying bricks and pouring some concrete.
Then that'll give you more time out in the golf course too, Michael, right?
That's exactly. Well, Kermit, thanks for joining us today. We appreciate you being on the show.
Good talking to you.
Thank you. Well, stay tuned. We'll have more on design and construction. This is the Commercial Real Estate Show. I'm Michael Bull. Stay with us. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate asset and occupancy solutions. Visit bullrealty.com. CCIM Institute, commercial real estate's global standard for professional achievement. Visit ccim.com. Xceligent, providing verified commercial real estate information across the United States. Visit xceligent.com. Valuate, easily share what-if analysis online with colleagues. Visit getvaluate.com.